You are gonna
No, definitely. That's what we're here for,
That's
bro.
what we're here for. I think you're gonna walk us through your strategy right now,
100%.
and we'll have it up on the screen for you guys, so you can take it away.
So one thing to understand, bro, this is one of the strategies and the core strategies that we teach, okay? But before we dive into the strategy, I just want people to understand basic market structure. And you know that in the market, you get higher highs, higher lows, okay? And that will in turn form a uptrend or a bullish market. So ideally, you want to be buying at a low price, and hopefully it will go up, okay? And then understanding that the reverse to that is actually a downtrend, which is lower lows, higher lows, lower lows, lower highs, all of that. And that's also called a bearish market. And understanding that you want to take sell positions from those type of scenarios or phases. And then a very important one is understanding that I've just showed you that the market can move in two ways, but the other way that it moves is in a range, which is an accumulation phase as well. Okay. And some people call that consolidation. But it all boils down to what we actually teach and what we actually do, which is drum roll. AMD, accumulation, manipulation, and distribution. These three phases are vitally important to me and to what we stand for and what we teach. Understanding which part of the market you are in and which phase to link that to is important. Okay? So accumulation, manipulation, and distribution is the core basis of our strategy. For this example, bro, I'm just going to go through the 16th of October, which was a few days ago. And I want you to understand, and everyone to understand something, that this type of setup will always present itself 2 or 3 times in a week, sometimes even more. Okay? So ideally, what you want to see is you want to see price accumulate. Okay? You want to see price break out of that range, create a double top, which is probably an M formation. Okay? And then eventually distribute to the downside. The reverse of that, okay, and stop me if I'm going too fast, is price breaks out of the range to the downside, creates a double bottom, and then distributes. So the accumulation phase is called accumulation, the range phase. The manipulation phase is the breakout, is the actual breakout, which is called AMD, which is called the manipulation. You get the double bottom, and then the move towards the upside is the distribution. All right. Now, seeing that take place and seeing that happening in the market ideally puts you in a scenario or in a position better than the rest of the traders. Why I say that is because you could potentially predict what's going to happen next. Okay. Now, we could potentially predict what's going to happen next, right? I just want to do this very quickly. So let's dive into the live market, bro, because that's the only way people are going to understand this. Okay, ideally we want to find the accumulation phase. Okay, so you could see from the 15th of October into the 16th of October, I drew a box. Now, essentially, this is my accumulation phase. So I know what to expect afterwards. And what to expect afterwards is the manipulation, the break towards that, is the market makers are manipulating the market, accumulating orders, tricking people into thinking that the market's going to continue buying or continue selling. In this example, we're looking at the market actually breaking out. Okay. Now, we're looking at the market breaking out. We know this is a manipulation phase. What can we expect next? Is a double top or an M formation, and then a move towards the downside.
So when do you actually know that the manipulation is over now?
That's the trick. Okay. But you're moving like 2 steps ahead of me.
Okay. No, do you think?
So I'm going to get to that. I'm going to get to that because that's a good question. Okay. But let's understand and try and identify the range, the tight consolidations in the market. Okay. And where you see that is actually here. This is happening. The market is ranging. Okay. I can take a trade even in the range. I can take a trade even in the manipulation stage. You know, it's identifying and being sure that you're in this stage. Okay. So we wait for price to break out. Okay. We had a small retest of this range. That's one confluence already. Let's trade the manipulation. Quick 50 pips. We're done for London session. Trade the manipulation. Okay. So we drew our range. Price broke out. Retested at this point where I'm drawing the circle. Okay. Take a small trade up there, 50 pips. We in the game. All right. So we in the game. But then now we've got to wait for our M formation. We got to wait for the actual bigger move to happen. And that can take a day to form. That could take a few hours to form. And if we had to skip to the next area, which is here, you can see this M clearly forming. Not one time, bro. 2 times.
Yeah.
2 times. And I think we even caught, I definitely know we caught this move here. This was a big move for us that we caught. So understanding which phase you are in the market is very important. Now, coming back to your question, my brother, when do you know this is going to happen? You know of a thing called support and resistance, supply and demand, all of that. I'm not saying forget about all of that. I'm saying what we need to do is you need to identify which are your strongest levels. And I'm giving everyone the secret here today. It's simple. Yesterday's high and yesterday's low. Mark those 2 levels down. Bro, it's an immediate magnet. The market is going to come test that level, if not break that level or reverse from that level. Okay? So if we had to go back, all right, or even a bit forward, let me just move this out here, guys. All right. Okay, we know we've got our M formation and we caught a trade or whatever the case may be. Now I want to actually go in and mark out yesterday's highest point, okay, and yesterday's lowest point in the market. And I want you to understand something, okay? These are our immediate magnets. I've just drawn it in a purple line, okay? Everyone can see this. If price breaks out of that range during the Asia session, at midnight, our time, South African Standard Time, and price trades back into that range. Now, this range that I'm calling is the range between yesterday's high and yesterday's low. Okay? But the perfect place for us to place our trade is in between yesterday's high and yesterday's low. Confusing, guys, but let me show you. We find the middle area. Now we've got 3 levels drawn up. We've got yesterday's high, we've got yesterday's low, and I'm not being too accurate with this. Let me just do that. Just now we have some comments in the box. Okay, yesterday's high, yesterday's low. When price comes to the 50% line or half of that line, we can expect to take a trade towards yesterday's low. How many pips that is, bro? That's 400 pips. If price breaks towards the upside, we could expect price to hit the previous day high of yesterday. Okay. Now, I want you to understand how powerful this is, right? And obviously, if there's any questions, bro, please go for it. I want you to put yourself in a position where you I'm explaining it to a 4-year-old right now, right?
Sure.
Because we want to try and get this out there. We want people to understand. That's what we spoke about over the phone. All right, so we've got our 3 levels drawn up, okay? Remember I told you we had our box. Remember our box? We had our box, sorry. Let me just do this again, guys, forgive me. We had our box drawn up, okay? We had our box. We knew that this box was our accumulation phase, right? We knew that price is going to go up, create a double top in this area, okay? And then come towards the downside, which is your distribution phase. If your distribution phase is targeting yesterday's low, you already have 3 confluences to enter the trade. If you see the move happening towards 50% of that range, you know that price is going to come, is going to push down to that magnet zone of yesterday's low. So it's simple, bro. People overcomplicate these things. Yes, there's a few other things that we look at. And I mean, if anyone wants to learn more, I'm all over socials. You just find me, But ideally, we want to show you that you can take a trade from any one of these positions, have your levels, which is yesterday's high, yesterday's low, and your 50% range of that, and understand that this is how the market is most likely going to move. Forget about higher time frame analysis. I'm not discrediting that.
Okay.
But bro, think about it. By the time you wait for the daily candle to turn bearish, is how long? It's a whole day. So you're essentially going to be sitting in front of the charts the entire day trying to catch the move.
What time frame are you using?
Bro, I use the 15-minute time frame.
15-minute time frame. And what's the risk-reward ratio that you usually go for?
Look, bro, your stops are so tight that you're on at least 1 to 3 at minimum.
Okay.
Risk to reward.
Okay.
But if we look at this trade for argument's sake, in terms of risk to reward, let's go in with a short position right here. Okay, and then we want to adjust it to at least that wick and targeting yesterday's low. Bro, look at that. That's a risk to reward ratio of 4.8. Don't complicate this. Understand number 1, first step, understanding what phase we are in. Are we in an accumulation phase? Are we in a manipulation phase? Or are we in a distribution phase? Wake up in the morning, mark yesterday's high, yesterday's low, find 50% between that. Use that as your entry triggers. You don't want to be trading. You don't want to be trading anywhere between that. You want to be trading either towards yesterday's low or yesterday's high. And this is an easy scalping strategy. This is a strategy that's been consistent on my group that I teach for free. So apart from you taking a signal from me, you're also learning.